Good morning, everyone. Happy Thursday. This is your market update. Powell's comment took US stocks to a 3-week low. The S&P dropped about 1.75% and Dow lost 500 points as airline shares plunged. Treasuries extended a global bond rally, taking the 10-year yields down to 0.65. The dollar was up against most of the majors, jumping against the Kiwi by about 1.5%. That was because of the RBNZ statement, which we will touch upon a little later. Oil fell as investors weighed the stockpile declines, which was a positive, against a darker outlook that was presented by OPEC on the demand and also the economic recovery. The IEA executive director mentioned that the crude demand will take more than a year or perhaps several to recover to pre-crisis levels. Gold hedged higher. Now, in terms of sector performance, the drags were energy was down about 4.39%, financials was down about 3%, while industrials and materials also dragged the S&P by about 2%. Now, it was all about Powell. Powell urged Congress and the White House to spend more or face historic economic turmoil. In comments that he made, he said additional fiscal support would be costly, but worth it. That was what he said on his online speech. The path ahead is both highly uncertain and subject to significant downside risk, is what he mentioned as well. He also batted down the suggestions from Mr. Trump and others that the central bank would adopt negative rates. He said the evidence of policy effectiveness is very mixed. One other point that I liked listening to Mr. Powell last night was he said the Fed has lending and not spending powers. The recovery may take some time to gather momentum, and the passage of time can turn the liquidity problems into solvency problems. So that is what and that is why the urge for on the fiscal side to do more. Now, keeping with the fiscal, the House Democrats earlier this week, remember that they released roughly a $3 trillion bill to battle the health and economic efforts of the coronavirus pandemic, a sum that would be about double of what Congress has allocated so far. But the Republicans have argued that they want to wait and see how the economy responds to the measures that are already in place. Thursday and jobless day claims day again. So jobless claims will be out later today. The number of Americans filing for unemployment benefits probably declined to about 2.5 million. That is the consensus from the 3.17 million the previous week. Now, Bloomberg Economic writes that whilst the worst of the shock has passed, significant economic damage is still ongoing. So that we will come to know, the number we will come to know later today. On the mortgage side, mortgage purchases have jumped 10.6% in the period ended May 8th. That is what the recent report says. So the gauge has climbed more than 33% since early April. That's the biggest 4-week gain since March 2008. So some positive movement in the mortgage purchases space. Moving on to equities, Cisco beat expectations. The revenue in the current period will fall about 8.5 to 11.5%, the midpoint of which is slightly higher than the 11.8 billion estimate. The adjusted profit would be about 72 cents to 74 cents, also topping the consensus. Earlier, Tencent also reported. So Tencent sales was beat after a surge in online gaming. So the WeChat operator's revenue rose 26% to about 108.1 billion yuan, which is about $16.2 billion, after online gaming sales leapt about 31%. The US will get Sanofi's COVID vaccine first if it succeeds. That's because it was the first in line to fund the company's vaccine research, said CEO Paul Hudson. Abbott fell after some preliminary report found that its 15-minute ID Now coronavirus test missed at least 1/3 of the positive cases detected with a rival test. Shell sought to appease investors after last month's surprise dividend cut. saying it will be well placed to boost payouts once the oil market recovers. So the CFO said our outlook stabilizes and our balance sheet is when our outlook stabilizes and the balance sheet is in the right position, we would be in a very strong position to increase shareholder distributions. That's what the CFO said. Moving on to rates. The Fed has been bolstering the corporate bond market with its purchase of corporate bond exchange traded funds. Remember, this started on Tuesday. So US investment grade bonds are broadly higher, with the long-term bonds getting the biggest lift from this Fed tailwind. A huge amount of action on the issuance space. The big debt deluge that happened. Royal Caribbean offered about 3.3 billion in senior secured notes. Uber is looking to sell about 900 million of debt for the Grubhub deal. Verizon is selling some bonds. Fiat Chrysler is also in the market. I mean, DuPont, Duke Energy, United Health, all of them are looking to come in and issue some debt in the market. On the sovereign space, Italian bond auction drew buoyant demand for even their long-dated securities. Moving on to Forex, the US dollar, as I mentioned, traded higher against all of the major currencies on the back of risk aversion and also the comments from the chair, Powell. Meanwhile, RBNZ reported yesterday. So RBNZ sent the New Zealand dollar tumbling lower after they surprised the market by doubling the size of their quantitative easing program to about 60 billion New Zealand dollar. So the interest rate was left unchanged, but the central bank said that they're prepared to cut interest rates further if needed, and negative rates are an option. Now, compared to the other major currencies, euro and sterling withstood dollar strength better thanks to the stronger than expected economic data. So industrial production numbers were out. So in the eurozone, so industrial production in the eurozone fell less than expected, while the contraction in the Q1 UK GDP was narrower than anticipated. So this is your market update. Stay safe and healthy, everyone, and I'll speak to you tomorrow as well. Thank you so much.